Hi there, Keith here again from Target Property Spain, and I'm here once again with Mark Elliott from Fluent Finance Abroad. Welcome, Mark.
Thank you, Keith. Good morning. How are you?
Yeah, very good, thanks. I can't believe it's been over a year since we last sat together and did an interview, and things have changed a little bit in the last 12 months. I mean, how have you found the market?
Things are definitely a bit different now than they were 12, 14 months ago when we last had a chat. I'm sure pretty much everyone who's involved in looking at the news is fully aware of the turmoil that we've seen with inflation going through the roof and interest rates rising. So yeah, it's been an interesting 12 months, that's for certain.
Yeah, I mean, I guess for us, the market itself isn't too different in terms of the demand. There's still an awful lot of people looking to buy, and there's still a shortage of stock. So we're relatively in the same place as where we were back when we were last talking. But for us, one big change we've seen is, as you said, is interest rates with mortgages.
Exactly right. I mean, last year was a great year, I think, for everyone. Everyone that I speak to in the real estate business said they had a record year. We had a very good year last year. We ended the year really strongly. But what's curious in our line of business is that we're always a couple of months behind where you guys are. So, you know, we have to work on the pipeline. Obviously, a mortgage doesn't happen overnight. You guys probably get a lot of cash purchases as well, which can happen within a couple of weeks or a month. When a mortgage is involved, it needs to be prepared. The application needs to be prepared. It needs to be submitted to all the different banks, and then we need to just start chasing the banks and get various offers, and that takes a little bit of time. So in general, we're normally a couple of months behind. What we did notice towards the end of last year is that the inquiry levels did drop down, and that affected our start of the year. The start of the year this year was a bit slow.
And you think that was related to interest rates?
Yeah, I think the market in general throughout the Western world is completely different. I mean, you look at the headlines of the news, the financial markets in the US, you know, back in October, is there going to be a housing crisis in the US? The same thing. When was it Liz Truss? Mm-hmm. Is that right? Was it Liz Truss? Yeah, it was. And Truss Economics, and when they come out with the budget in October, and I was looking at the headlines, and I went to a mortgage exhibition in London, and everyone's up in arms, you know, because the market reacted to, you know, what they were thinking of implementing, and interest rates went through the roof. So, you know, mortgages in the UK the mortgage market was in massive turmoil. So that obviously had a bit of had a knock-on effect on people's appetite for purchasing a luxury item or luxury items, and one of those could be a second property in Spain.
Yeah, we said in our last market update, in fact, that we felt there's going to be a lot more properties on the market after the summer down to interest rates. I mean, it happened to me. I was on a fixed rate for 18 months, and then I went to variable, and my mortgage shot up about 350 euros overnight.
Yeah.
So I'm a resident, I live here, that's my principal home. But as a holiday homeowner, particularly if you're feeling the pinch a little bit back in your home country and suddenly you've got a few €100 more a month to find, the first thing to go is generally the holiday home. And we find the timing with that, from past experience, is that people will come out, have one last summer holiday, and then give the keys to an agent and say, we can't afford it anymore. We've had 5 or 6 good years, but can you put it on the market and sell it for us?
That's a really interesting point, and it's one that as I'm not a real estate agent, it's not one that I've considered. So what you're saying is that you feel that there may be more properties coming on the market?
I think we're going to see more resale properties coming on the market after the summer. Okay. For that very reason, that people are now feeling the pinch.
It does make sense. I mean, look, we deal with clients from all over the world. A lot of our clients come from Britain. A lot of them are buy-to-let landlords or have a buy-to-let portfolio. Mm-hmm. A lot of people are saying that the interest rates that they're paying on their buy-to-lets have gone up, so they're not making as much profit or much yield, and so we're seeing that some of our clients are selling buy-to-lets in order to come with more of a deposit to purchase over here, which is like is natural. So what we're seeing from other feedback that we're getting from other clients in other countries, you're saying it may have an effect here as well. You may see some more properties coming on the market.
Yeah, I think so. That's what happened last time. So I expect history to repeat itself.
Yeah.
So we always tend to get the question. Look, at this stage in the buying journey, is it a good time to buy? Should I be looking to buy it now, particularly when they're looking to finance? Because, we've been looking at interest rates close to 0% for the last 10 years or so, and now they're up at what? They're up at probably 3.5% over base rate.
Euribor currently at the moment, the yearly Euribor is at 4%.
Okay.
So this is what we're working with at the moment. To try and sort of contribute to your question, is it a good time to buy? Well, when is a good time to buy? Spanish banks are still healthy. They're still lending money. It's not like in 2008 where they weren't lending any money. So credit is still available. If you are interested in buying, then and it's definitely something that you want to do, you can definitely look to a mortgage. Now you can look at, Spanish banks are trying to come up with new products. For example, before 2-3 years ago, you had a choice basically of a variable rate or a fixed rate. Mm-hmm. Well, now Spanish banks are trying to come in with different options. So, for example, they call it a mixed, but generally, if you're from the UK, you'd understand what a 2-year fixed or a 5-year fixed. Well, Spanish banks are starting to come up with a 5-year fixed option, which might be attractive. So instead of, if you're anticipating inflation to calm down a bit over the next 12 months, and you see interest rates easing off a bit, then maybe a 5-year fix might convince you that it's a good bet to do it now, rather than wait 12 months or 6 months or 18 months or 2 years.
I think that's the key point. When I took my mortgage out for my current property, I was offered 18 months on a fixed, and then it went to variable. And because rates were so low, I said, yeah, that's absolutely fine. I don't see rates going anywhere north anytime soon. Yeah. And now look where we are. So had I been offered, in hindsight, would I now take a fixed term mortgage? Yes, I'd jump at the opportunity. Yeah. So I think the best way of looking at it is if you can get yourself a nice fixed term rate over a good term, so even for the duration of the mortgage, if you can.
You can do, yeah.
You know exactly what you're going to be paying for the duration of that mortgage. Now, yes, interest rates may go down and it may go against you, but in the same breath, they could very well go up.
Exactly right.
And it will go against you.
One thing I think we've learned over the last 5 years is that no matter how much you try and study economic experts, what I've noticed is absolutely none of them can predict the future. No one really knows what I remember reading a report from one of the major Spanish banks here, and it was an internal report between them. I was sent it, and they were predicting that interest rates will remain rock bottom for at least a decade and a half. Well, how wrong were they? I mean, this is their chief economist within one of the major banks in Spain. Well, they were completely wrong. So what the fixed rate option, if you're going to have the property and hold it for medium to long term, is you can budget. You know what your monthlies are going to be, so you can add on your community fees, your IBI and your electric and whatever, and you know that each month or each quarter, each year, you know exactly what you need to budget for. But because it's a fixed rate, and imagine it's 3.5 or 4 or 4.5, whatever it may be, in 10 years' time, that monthly payment will still be the same. Mm-hmm. Now, inflation obviously goes up every year, whether it's 1.5, 2, 5 or 10, as we've been seeing in the last 12 months. It's a hedge against inflation.
Yeah, and I think everyone would agree that the world has never been trickier to predict. Certainly since COVID. I get the question all the time: what normally happens, Keith, in this market? When do the buyers normally arrive? When do the properties normally come on the market? And my answer is always, well, when you say normally, the world hasn't been normal since COVID. So everything has completely changed.
It's been, I mean, Brexit as well. That was something which I would say was not particularly normal. We wasn't expecting that.
Yep.
So we've had to deal, we've had to factor in Brexit, and then we've had COVID, and now we've got, the issues with Russia and Ukraine. So yeah, the last 8 years has been pretty bumpy.
Yeah, certainly.
And who knows what's going to happen in the next 2, 3, 4, 5 years.
Yeah, well, touch wood, there's no more pandemics and no more major political dramas to deal with. One thing that you can't dispute, though, is that property prices have continued to rise. And one thing we are finding from our buyers is that a lot of them are arriving with expectations of what their money can buy them. Those expectations being a little bit unrealistic. Maybe it's not quite what they saw on A Place in the Sun, or maybe they're looking at old listings or old footage. Yeah. And a lot of them are arriving thinking their money's going to buy them their dream and realising they're falling a little bit short. And I'm talking about cash buyers here.
Yeah.
So I think one thing that these buyers should consider is a top-up mortgage.
Yep.
Because if you're arriving with 300,000-400,000 euros and you're expecting to find a villa, you're not going to find it in this neck of the woods. But if you can top that up with a mortgage of a couple €100,000, suddenly you're back on course.
Yeah, and I 100% agree with that, because a mortgage is a tool. It's a financial tool which can only be used to buy property. You can't buy a car with a mortgage or get a kitchen. A lot of people worry about speaking to mortgage advisors or financial advisors because, at the end of the day, we are salespeople, and it's in our interest to sell something. And in my case, it's a mortgage. But what I want to say is that when me personally and our business, it's not in our interest to try and upsell you too much, because borrowing money from a bank, it's all about finding the balance, the scales, if you like. And if you need it, let's say, for example, you're buying a house for 700,000 or whatever it might be, 300,000, and you needed something, a low loan to value mortgage. Well, to us, that doesn't matter. We're not here to try and force you to take a mortgage of the maximum, because in most cases it won't fit, it won't work. And our job is to make sure that you're going in at the right loan to value. So, like, for example, you need on a 700, you may only need 200.
But I guess, even at touching on 4.5%, it's still relatively cheap to borrow money, and it's the bank's money. They want to lend it.
Yeah.
And I guess if your money can earn you more than that elsewhere in the world in other investments, then use the bank's money. Why use your own?
Well, if it makes the difference between you buying a property and not, then you at least consider it. And what I'm trying to put forward is that we're not interested. All we're interested is finding you the money that you need in order for you to move forward and buy the right property. A mortgage of 200,000 obviously is going to be much cheaper to service on a monthly basis than a mortgage at 70% of 700. Whenever we are, as a company, we'll never force you or try to force you into doing something that you're not comfortable with. So if you're worried about, I don't want to talk to these people because I just feel that they're going to push me into something that I don't want to do. With us, you're not going to do that, because the most important thing is that you feel comfortable enough to move forward. Yeah, a mortgage of 200,000 may be the difference between you buying something and not, and going back and then forgetting about your dream of ownership in Spain. We can show you how initially, before you make any commitment to any real estate agent or to any property, how those numbers can work for you. And they're numbers. They're just hypothetical numbers. If at the end of the day the client decides that those numbers do not work for them, then of course you can go back to your original cash budget. You can go back to your agent and say, look, I've explored the mortgage angle and it's not for me. But a lot of time, if we show them the real figures and we show them that if they borrowed a little bit extra, that top up, they can actually buy a property which is in a better location.
Yep. And as you know, we're trying to do this with our clients prior to them arriving here. Yep. You know, we'll talk to them on the phone, we'll get a handle on their budget and what they're looking for. And if it's unrealistic, we're not one of those agents that's going to say, sure, come over, we'll find you something. We're realistic and we're going to say, we think you're going to struggle.
Yeah.
But have you considered a top-up mortgage? Adding 100, 150, 200,000 euros to your budget, have a chat with Fluent Finance Abroad, free of charge, do the fact find, work out your numbers, and then you're pretty much arriving as a cash buyer here. If your mortgage is pre-approved, which vendors are obviously keen to accommodate. No vendor in their right mind at the moment in the current market is going to listen to an offer subject to mortgage. It needs to be signed, sealed and delivered.
We're finding that as well, yeah. We're getting a lot of, I need to put my 10% down and I've got 2 weeks, and I'm like, it's a shame we weren't, because now we're under pressure to do the numbers, make sure the numbers work, make sure you're comfortable with the numbers, then okay, so put forward a proposal, you like us and you trust us to get this done. We then have to then get the documentation ready. Most of our clients are going to be fairly complex because they may have the majority have companies or earn dividends or have various companies. We need to get all of that in place. And then we then have to get the approval from numerous different banks, and we've got to do that within 10 days. Yeah,
so it's fundamental, isn't it, to do your homework, do your preparation before you arrive, because it's such a vendor-strong market at the moment that a vendor, if you approach a vendor and say, okay, we've got an offer, but it's subject to mortgage, and they need 4 to 5 weeks to sort out their mortgage, a vendor in the current market is going to say no, because a cash buyer is probably going to walk along tomorrow, and it's such a strong market that you're going to lose the opportunity.
Yeah, or worse still, you could put 10% down because you're under pressure to do so, because the vendor has quite a lot of power.
And then if you can't get the mortgage or you're not happy with the terms, there's a real risk that you're going to lose that 10%. Yeah.
And that's a lot of money, to lose 10% just to give it to a vendor. I wouldn't want to do that myself. I'd want to make sure that before I did that, I had everything in place.
Saying that, in all the years we've been in this business, I've never had the instance where a client of ours has put down 10% and lost it, because we give good advice. Exactly. We're here to protect them, and I think that's the thing in the Spanish market at the moment. You need to be led. You need somebody with experience and feet on the ground to keep you away from the pitfalls. It's a bit like cooking your first pancake. Your first pancake's always going to be a bit mangled, isn't it? And it's going to be your third or your fourth one where you're flipping them correctly.
Yeah, it's experience.
Exactly.
And knowledge and know-how.
So there you go. We go from property advisors to pancake advisors in the blink of an eye.
Why not? Really think this point is very important. The real estate market is unregulated in general in Spain. Not all agents are equal, from my experience. I don't sell property, but I deal with a lot of real estate agents over the 2 decades that I've been here. It's essential that you get the right team around you who have the experience, who come recommended, because it is it's a serious business. If you get it wrong, it can be very costly, i.e. you can lose 10% or more. If you get it right, it can be a very nice process. It can be very smooth, and it could be a very good experience, because essentially you're buying a dream property, not just for you, but for your immediate family, potentially your grandkids as well. I mean, it could be a nice legacy. But please, what I would say to people is do your research, speak to as many professionals as possible, and find people that you can put your trust in, because it can go wrong. There are no regulations.
Yeah, I mean, we don't want to put the fear of God into people, but you're right, things can go wrong. But what is important, as you said, is do your prep, surround yourself with a good team that are giving you the whole picture, looking after your best interests.
Exactly right.
And then your buying journey should be pretty problem-free. So really useful again, as always. Our main takeaways from today's conversation: A, is it a good time to buy? Yes, if you're getting the right advice, if you're finding the right property. It can be a tricky road, so make sure you're doing your prep and surrounding yourself with a good team. Should you go for variable or fixed term rate at the moment? Fixed term rate for me, especially if you can get it over the complete term of the mortgage, For me, I would jump on that at the moment. And most importantly, always do your homework. Make sure you're getting the right advice. Make sure you're getting your mortgage approved before you arrive, even if you don't need one, because you might well arrive here, find that your budget isn't quite getting what you saw in the brochure, and then you're really going to benefit from having your top-up mortgage already agreed in advance. That's all for now. Catch you next time. You know, is it a good time to buy? Yep. And we always try to give the whole picture. Sorry, I've lost the track.
Sorry. Is it a good time to buy?
Yeah.
And you try and give the whole picture.
Hold on.
Surely you know the answer to that question.
I do. Yes.
Or is it? It was a bit. Good.
Good. Right, stay there.